Hey everybody, Boris speaking Forex. Welcome to our commodity dollar update for June 25 to June 29, 2018 for Aussie dollar, dollar CAD, and Kiwi dollar. And the big story in the COM dollars this week, of course, I think it was the flip. The real big flip, especially end of the week, as the COM dollars came back with a vengeance. And a lot of it, in fact, I would argue almost all of it, was really driven by the rate differentials. US rates started to drop below the 290 level, and that put the juice into Aussie and the Kiwi especially, and even gave a dollar CAD a little bit of a prod as both of them returned. Now the levels changed a little bit. Aussie dollar still now kind of a little bit lower at 73 to 75, but much off its bottom. Dollar CAD certainly saw a very interesting flip at the 133 level, a big reversal candle, and suggests that is pretty much the near-term top against which you would trade. And Kiwi has proven once again that 68 is the absolute floor in that trade for the time being, and the 68.70 is the range that we're looking at as the week progresses. Now, looking at the calendar, not much on the calendar this week on the COM dollar land. We do have, I think, the RBNZ trade balance data on Tuesday, and I think we have the RBNZ cash rate decision, none of which is expected to really change things around, although Kathy is thinking that RBNZ is likely to remain dovish, but rate decisions will probably be certainly the same as everybody expects them to. The only other thing on the COM dollar land, I think, brings us to Friday, where we look at Canada. We have the Canadian GDP data, which will be of interest, of course, because although we have lots of conflicting data here with some weak retail sales, the trade balance was actually stronger. So we're not certain exactly which way the GDP goes, so we have no trade call on that number. But overall, that's pretty much it. The COM dollars are really not going to be trading on any specific economic data point this week, but much more on the interest rate differentials. And if we can see further decline in interest rate differentials, it's very likely we're going to see much better performance in COM dollars over the next couple of days. Technically, very clean, clear a turn in Kiwi dollar here. Probably one of the better ideas for extension, either on its own or perhaps on a cross basis. This trade right now looks to me like one of the better trades at the start of the week. Now, it's not going to be a high volatility trade, but can we reach to 69.50 before we reach any kind of meaningful resistance? Certainly. And ultimately, could certainly test back the 70s if the week progresses, if we get any further dollar declines. If 10-year goes to 285 and further risk aversion flows, it really puts the bid in the Kiwi as the alternative here to the yield on a dollar. And this particular structure technically looks very bullish for at least another 50 to 70 points to the upside. On the Aussie dollar, same kind of a story, also another very big breakout candle. I mean, it's sort of the same story on all of them. You kind of just want to close your eyes and take a dip and just start buying the COM dollars at the front of the week and hope that this extension continues, because technically this nice big breakout move on Friday really suggests that we should be able to extend close to 75 on the Aussie before we reach any meaningful resistance there. And then last but not least, here's the flip in dollar CAD, and that is a nice looking flip. And notice that when you have these kind of turn candles, so here's another good example. Here's another analog of a good turn candle. It may not work for a day or two, but what it is it doesn't threaten the stop. You certainly can survive any backward flow, and ultimately you certainly do have a signal for further downside price action as this flip candle goes. I'm just trying to see if I can show you a couple of more. So here's one where you also have a threat the other way, but doesn't threaten the stop, and ultimately the trade direction does signal the candle direction. So I like this trade. I like all the COM dollar trades this week. Depending on the sort of how much more risk you want to assume, probably the Aussie or the Kiwi are the better trades as we start the week. But CAD certainly is a good candidate if you're willing to assume a little bit more volatility, as the extension here could take us all the way down to 131 before we find any meaningful bottom. So that's kind of how the COM dollars shape up. They are the flip trade against the dollar as the week closed out, and they seem to be the strongest continuation trade as the week opens up. If we can get any kind of help from lower U.S. yields, the trade should really be in the bag. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.